So any income by way of special capital gain on transfer of equity share of the domestic company being a unit of IFSC as it referred to ATLA engaged primarily in the business of lease of the aircraft has been commencing operation on 31 March 2016. Exemption of the capital gain on transfer of the equity shares on such domestic capital is available for the period of 10 years. That assessment year on the previous year domestic company has commenced operation up to the assessment in 21-24 by the period of 10 assessment year by 1st April 2024. It's available to non-resident unit of IFSC and refer to the Section 8 one engaged in the primarily in the business of leasing of aircraft. Section 10, Subsection 6, Clause 2. Remuneration received by a foreign diplomat, consultant, and the staff, subject to conditions. Individual not being a citizen in India. Section 10, 6, Subsection Clause 6. Remuneration received as an employee of a foreign enterprise for a service rendered by him during the stay in India. If this enterprise is not engaged in any trade or business in India and his stay in India does not exceed aggregate period of 90 days in the previous year, such remuneration is not liable to reduction from the income of employee chargeable under the tax. Individual salaried employees not being citizen of India for the foreign employee. Section 10(6), Clause 8. A salary received due by or due by service rendered in completion of his employment on a foreign ship if his total stay in India does not exceed 90 days in a previous year. The individual salary employee, non-resident, and individual salaried employee, non-resident who is not a citizen of India, under 10(6)(9)(11). Remuneration received by an employee of a government of foreign state during a stay in India is connection with his training of any government official, statutory undertaking, corporation or registered society, etc. Individual salaried employees not being an Indian citizen of India for the government of foreign state. Section 10(6), Class BB. The tax paid by the Indian company engaged in the business of operation of aircraft, which is acquiring aircraft and aircraft which is has acquired an aircraft or an aircraft engine on lease under the approval of central government agreement under the 1st April 1997 to 31st 1999. And after the 1st March 2017, the lease rental income deferred after other than the payment of providing spares of the service connection with the operation of the leased aircraft by the government of a foreign state or foreign enterprises. The foreign government of foreign state or foreign enterprises that is company who is not resident. Section C. Royalty income, fees of technical service under the agreement in the central government providing service in outside India, a project connection to service security in India. Foreign company notified by central government. 10(6)(d). Royalty income or fees of technical service rendered in outside India to the National Technical Research Organization, non-corporate, non-resident or a corporate foreign company. 10(15)(3). Interest on the deposit made by the foreign bank or the scheduled bank with the approval of RBI. The banking incorporated outside India and authorized to perform central banking functionaries in the country. So 10(15)(4)(fa). The interest payable by a scheduled bank on a deposit of the foreign currency where acceptance of such deposit is duly approved by the RBI. Scheduled banks does not include cooperative society. Non-resident individual of HGF being a resident but not an ordinary resident. 10(15) Class 8. Interest on deposits on after 1st April 2015. Offshore unit bank unit. Individual or HGF being a resident, not an ordinary resident. Also, 10(15) Clause F. Interest payable in the unit located in IFSC and prepay respect of the monies borrowed it on by in 1st November 2019 non-resident. Section 10(15)(a). Rental paid by an Indian company engaged in the business operation of an aircraft to acquire an aircraft or acquire aircraft engine on a lease other than the payment that provides spares or secure service in connection to which the operation of the lease aircraft under the approval of central government agreed not entered between 1st April 1997 to 31st 1999 or after 31st 2009. So the government of state, government, a foreign state, a foreign enterprise that is a person who is not a resident. 10(23) BB. Income of an European Economic Community income of an European Economic Community derived in India for interest, dividend, or capital gain for the investment out of the fund under the notified schemes of central government. European Economic Community. 1023 BBC. Income of an Sarag found by regional a regional project set up by the Colombian Recognition. Sarag found by the regional project exempted for them. 1023 FBC. Any income accrued arise to a unit received by unit holder for specific fund on the transfer of unit to specific fund. Unit holder of specific fund. 1023 FE. Interest, dividend income, dividend interest, any sum referred to section 56 to 8. Long-term capital gain arising specific person from the investment made by India where a former debt or a share capital. It is such investment is made from 1st April 2022 to 31st May 2024. It is being a long-term capital gain arising specific person from the investment made by it in India where a fund capital gain was by specific person wholly owned subsidiary of Abu Dhabi Investment Authority or a sovereign wealth fund or a pension fund satisfying the prescribed condition at least for 3 years in the business trust in a company, economic enterprises or an entity in developing and operating maintaining infrastructure facility. The SEBI category 1 to IAF has been not less than 50 of the investment, one or more of the company or enterprises. An entity referred under 2, 3, 4 or 6 of the infrastructure investment trust. Domestic company set up in the registered on after 1st April 21 and having 75% investment is one or more of the companies or the enterprises referred to that. NBFC registered as on the infrastructure finance company or the infrastructure debt fund having 90% leading to one or more of the companies or enterprises are discussed in 2, 3. So reference to this detailed discussion 21. So 1023 FF. The income of the nature of capital gain whose resident non-resident or specific fund. Income on a nature of specific capital gain on account of transfer of share of a company resident in India by a resultant fund or a specific fund to the extent attributable to unit held by a non-resident, not being a permanent establishment of a non-resident in India. In such a manner may be prescribed such shares are transferred from a original fund or wholly owned special purpose vehicle. It is a resultant fund is reallocated, but the capital gains tax is not chargeable tax if that reallocation has not been taken place. The income would be exempted only when the specific fund furnish an annual statement of exempt income in a prescribed form, electronic and digital signature on or before the due date of the 139 month. In such forms not filed specific fund, the exempt income shall be made. Further, small annual statement prescribed form has been certified by the accountant before the specific date 1 month prior to the due date, and the accountant has to furnish by the due date and certify the prescribed form electronic and digital certificate. Any income by way of dividend for the company being a unit of IFSC primarily engaged in the business of leasing of aircraft. Unit of IFSC engaged in the business of leasing of aircraft. Section 1048. Income received in India in an Indian currency on account of sale of crude oil or another goods or rendering services as may be notified by central government in behalf to the person in India. The central government engaged should be notified by central government national institution. The foreign company or account of sale of crude oil, any other government or rendering service, it should not be engaged in any other service activities in India. Section 1049. Income accrued arise in account of storage of crude oil in facility in India and sale of crude oil. Therefore, if any of the person resident in India, the foreign company and agreement should be notified in central government and national interest. The foreign company on account of storage of crude oil in the facility of India and sale of crude oil. Section 1048. Income from sale of leftover crude oil from a facility in India after the expiry of agreement, and the agreement referred to section 1048A or a termination of such agreement or agreement in accordance with the terms of mention as the case may be subject to such condition as may be notified by central government. The foreign company for sale of leftover stock of crude oil from a facility in India. Present to taxation for non-resident. Section 28 deals with the income chargeable to income tax under the head of profit and gains of business or profession. Certain provisions has been incorporated on income tax 1961, whether by the profit and gains of business or profession. Certain non-resident assets is complete on the basis of certain percentage of the amount accrued arise out of resident in India. Social provision of computation of the profit and gains of shipping companies and case of non-resident. Section 44B and non-obstain clause. According to section 28 to 43, it's not applicable in the case of non-resident engaged in the business of operation of ships. Profit and gains of a non-resident engaged in the business of operation of ship, that is 7.5% of the aggregate of the following amount. Aggregate in adding for amount paid or payable within India or outside India to the assessee or to any other person on behalf on account of carriage of passenger, livelihood, mail, goods shipped on any port in India, plus the amount received or deemed to be received in India by or behalf of the assessee on account of the carriage of passenger, livestock, mail, goods shipped in India. Paid or payable received in assessee to any person on behalf of the account of passage. So passengers carriage, shipping, livestock, massive, whatever the paid and payable plus receivable, these all together the amount referred above, which include the demurrage charges or handling charges, any other amount similar nature. The amount paid or payable on account receivable or deemed to be receivable will be include the amount paid or payable or received deemed to be received by way of demurrage charges or handling charges or any other amount referred CIT Japan Lines Limited 260 ITR 5656 Madras. The 7.5% of the gross amount mentioned above should be liable to tax and no deduction will be allowed for any expenditure in the provision, the address provision of section 28 to 43 are not to be taken into account. However, the carried forward loss would be allowed to set off from the income. Analysis of section 44b and section 172. Section 44b and 172. The presumptive tax provision of non-resident engaged in a shipping business and does not, however, sustain in any procedures for assessment of collection tax. Section 117. Complete code of taxation of occasional shipping business of non-resident, including assessment and collection tax. Manner of computation of presumption of income. Notwithstanding anything in the contrary contained from section 28 to 43A in the case of assessee being a non-resident engaged in the business of operation of ships, the sum equal to 7.5% of the aggregate of the amount paid or payable whether outside India to a non-resident or to any other person on behalf of account of the carriage of the passenger, livestock or mail or a good ship to any port in India, and the amount received to be deemed to be received in India on account of the carriage of passenger, carriage of livestock, carriage on mail, carriage of goods shipped to any port outside India shall be deemed to be a profit and gains of such business and chargeable to tax under the head profit and gains of business of operation. Manner of computation of income under section 172. When a ship carries on the passengers, livestock, mails, goods shipped at the port to India, sum equal to 7.5% of the amount paid or payable on account of the carriage to the owner or the character or to any person on behalf, whether the said amount is paid or payable in outside India, shall be deemed to be income accrued arranged in India, the owner of the charter on account of this carriage. Other provisions, section 172, furnish a return of the amount of the owner. Section 172.3 imposes an obligation on the master of the ship to prepare and furnish to the assessment officer return of the full amount paid or payable to the owner or a character to any person on his behalf on account of the carriage of passengers, carriage of livestock, carriage of mail, carriage of goods ships on in any port of India since the last arrival of ship is their return. Such a return is originally to be furnished by the master of the ship before the departure from the port in India of the ship. As the return may, however, be filled by a person authorized by the master of the ship within 30 days of the departure of the ship from the port, if the assessing officer is satisfied that it's not possible for the master of the ship to furnish a return required in section 172.3 before the departure of ship from the port, the master of ship has to make a satisfactory arrangement on the filling the return and payment of tax has been taxed by any other person on the behalf. Assessment. The section 172.4. The section provides for a summary procedure of assessment. On the receipt of return filed by the master of the ship and by any person on behalf, the assessment assessing officer has to determine the tax payable on the taxable income. By virtue of the provision of Section 172, the taxable income of the sum equal to 7.5% amount paid or payable on account of carriage of passenger, etc., to the owner of the charter or to any other person on his behalf, whether the amount is paid or payable in or out of India, the tax payable on the taxable income to be calculated, the rate or rates in force applicable to the total income of a foreign company. The master of the ship is liable for the payment of tax. Time limit for passing such assessment order Section 172 4A or 5. It is an incumbent of assessing officer to pass order of assessment within 9 months from the end of the financial year in which the return of the income on Section 172 3 is filed. For the purpose of determining tax payable, assessment officers are empowered to call for such accounts or document as may be required. Grant of port or clearance to a ship. Section 1726. A port or clearance shall not be granted to the ship until the collector of the customs or other authorizing officer is satisfied that tax assessable under Section 172 has been duly paid or for satisfying arrangement has been made for the payment thereof. Option to pay tax as was per nominal provision of Income Tax Act 1961 and the income chargeable tax in Section 172, 177. The owner of the charter has the option to claim before the expiry of the assessment year relevant to the previous year this date of departure of the ship for the import falls. This assessment is respect to the total income. That the assessment is respect to the total income of the previous year and the tax payable on the basis therefore determined accordance with the other provision of that. In this case, the payment is made in 172 is treated as a payment in advances of tax leviable assessment year, and the difference between the sum so paid or amount taxes is paid by him and refund to him in case payable. The sum chargeable to tax under section shall include the amount payable by way of a rate charge or handling charge or any other amount similar charge. Section 172 via and versus Section 45. Section 44 B. The case of assessee is covered under Section 172 and 7.5% of that 7.5% of the amount paid or payable on the account of the carriage of the passenger, livestock, mail, or goods to be the owner or charter or any other person on his behalf is deemed to be the income or tax to be levied on such income at the rate of applicable to the foreign company. 40% plus charge if any, and plus health and education charge at 4%. Under the provision of Section 172(7), non-resident owner or charter is allowed on a opinion to be assessed on the total income of the provision. The previous year in the accordance with the other provision of the Act, that is 44B. When such option is exercised, the regular assessment is made. In such a case, a tax already paid under the provision of the Section 72 for Section 72 clause 4 by the non-resident owner or a charter would be treated as when tax paid in advance for the assessment year before determining the amount of taxes finally due. The advance difference in sum to be paid and amount tax payable to him such assessment shall be paid by the assessee or refund to him. See note. In the case of non-resident assessee is liable to pay the interest under Section 234 E to 34C and also entitled to receive the interest under Section 244E of Income Tax Act 1961 as the case may be Circular 9/2001 dated July 9, 2001. Refund may arise in the case of non-corporate non-residents since they are liable to pay tax at the rate lower than 40% surcharge and 4% applicable to the company. The Supreme Court of AS Military is a CIT 1997-25 ITR 739. Supreme Court said the assessment made under Section 172(4) shall be ad hoc assessment and it will be superseded. It's a regular assessment in option as per the provision of that. Illustration: the seaport shipping line or non-resident foreign companies engage in the business of carriage of the goods shipped in Ubico. During the previous year 31-324, it has collected the freight of 100 lakhs and the demurrage 20 lakhs and handling charge 10 lakhs. The expenses of operating its fleet during the year is 110 lakhs. Compute the income applied to the provision of prescribed in Section 44B. 44B provides that in the case of assessee being a non-resident engaged in the business of operating a ship, the sum equal to 7.5% of aggregate of the following amount would be deemed to be profit and gains of the company chargeable to tax under the head profit and gains of the business profession. Amount paid or payable, whether within India or outside India, to the assessee or to any person on his behalf on account of carriage of passenger, carriage of live food, carriage of meat, carriage of goods shipped at any port in India. The amount received or deemed to be received in India by assessee himself or by any other person on behalf of the account of carriage of passenger, live food, meat, goods shipped or any port of India. The above amount will include demurrage charges and handling charges. This provision of the computation of income from the shipping company in the case of non-resident would apply notwithstanding anything to the contrary contained in the section 28 to 43A of Income Tax Act 1961. Thereby, the case means seaboard shipping line is required to pay tax in India based on the presumptive scheme as per section 44B. Assessee shall not be entitled to set off or any of the expenses incurred in the earning such income. Therefore, shipping line is required to pay deemed profit of 9.75 lakhs, 7.5 lakhs, 130 lakhs. 130 lakhs can be computed. 100 lakhs on freight, 20 lakhs on demerger, and demurrage, and 1 so 130 lakhs on it. So 130 lakhs to be paid, or whatever 7.5%. Tax payable would be reduced by the amount of tax paid under section 1. Tax payable would be reduced by the amount of tax paid under section 172. A special provision of computing profit and gain in connection with the business of exploration of mineral oils. In section 44AB of a non-observance clause. According to section 28 to 41 and section 43 and 43A, is not applicable in the case of non-resident engaging in the business of providing service and facilitation in connection with supplying of plants and machinery and higher use, and to be used in the prospection for extraction or production of minerals. Eligible under section 44B provides determination of income of taxpayer being a non-resident engaged in the business of providing services and facilitating in connection with and supplying plant machinery, higher use or to use of prospecting for extracting for production of mineral oil. Prospective rates, and in such cases, profit and gain shall be deemed to be equal to 10% of the following manner: paid or payable to a taxpayer or any person on behalf or whether in or out of India on account of provision of any such services or facilitation or supplies of the plants and machinery for the aforesaid period in India. Received or deemed to be received in India by or behalf of the assessee or account service facilitates or supply of plants and machinery used or to be used in the perspective of extracting or production of mineral oil outside India. Non-applicability of presumptive taxation under 44BB. The provision of the 44BB shall not apply to any income in which provisions section 42 or 44DA or section 115A or 293A apply to the perspective of computation of gain or profit or gain on any of the income referred in the section. Section 42, 4280, 44DE, 115A, 293A. So provision section 42 special provision for deduction in case of business in prospecting etc. for mineral oil. 44D special provision for computing income by way of royalties in case of non-resident. 115A tax on royalties and fees on technical services in case of foreign companies. 293A power to make exemption etc. in relating to participation in the business of prospecting or extracting of mineral oil. Opting to claim a lower profit. Assessee may claim lower income that prospective rate of 10% if he keeps books of accounts under section 44A2 and get him audited and furnish a report in section 44AB. Assessment in such case shall be done by the assessing officer under section 143. no set of or unobserved depreciation or brought forward loss. An assessee declares profit and gains under 10 percentage for any previous in accordance with the presumptive provision under this section. No set of or unobserved depreciation or brought forward losses will be allowed in the assessee for the previous year. Meaning of certain terms. For the purpose of this action, the plant includes ships, aircraft, vehicles, drilling units, scientific apparatus, and equipment used for the purpose of the said purpose. Mineral oil includes petroleum and natural gas. Note, if an income of a non-resident is in the nature of fees of technical service, it would be taxable under the provision of either Section 44DA or Section 115A or irrespective of the business to which relates. The 44BB would apply only in the case of consideration for services, other facilities relating to the exploration activity which is not in the nature of technical services.